um, just everyone should join. Once I start teaching, I won't be able to add anybody again. So I'm waiting for you guys to complete this. We have 7 persons. Yeah. And Krish, I hope you'll be I hope you're recording.
Hello, brother.
Okay. Yeah, yeah. How you doing, bro?
What about you, bro?
What'd you say?
I say, what's up?
I'm fine. What's wrong with you? Are you okay? You having
Yeah,
cold?
yes. I'm suffering from cold.
Alright. Sorry. Stop ice cream for now. I'm still waiting. I'm still waiting. We are not complete. I'm still waiting for the new guys and I'm still waiting. So we are like 6 here because Krish is 2. So we are 6 here. Plus me, 7. Okay. Alright, I will start right away. I can't wait again. So Chris, you start recording once I open the chat. Okay, so I'll be going straight to what we have for today. So yeah. So we'll be talking on GBP USD today. So I'll be using GBP USD as my the major pair I'll be using to teach today. So is my screen visible?
Yes, yes, yes.
Alright, hold on. I'm having network issues here. Alright, so hold on a little. Oh man. Hmm. Hold on guys. Let me set up. All right, so this is the monthly chart, all right, and I hope you guys can hear me very well. You can also see my screen, right? All right, so um, this is
That's
the
deep.
monthly chart. So I want to teach you. You say? All right, so this is the monthly chart. So I'll be teaching you how to trade each month. Each month has every opportunity in it. Each of these months has every opportunity. All right. So but so I'll put a markup on it. Yeah, from this buy. I'm just choosing any random candle. So we talk on it. All right, and this one. This is the last one. All right. So yeah, hold on. Yeah. So um now look, guys. This should be your observation. Okay, in every month, check the day at which the month opened. So this month opened on Tuesday. This month opened on Thursday. This month opened on Monday. This month opened on Tuesday. All right. So you want to start looking for trades from. Okay, hold on. So you want to start looking for trades from the new week, which is to be the Monday. All right, the Monday of this month, the first Monday of this month. So that's when you want to start your trades from. Okay, this was on Thursday, so you wait this Thursday, wait Friday, then Sunday weekly opening, then you start looking for trades from there. All right. Same thing with this. Okay, this actually opened on Monday, so it's a nice day to trade. To You can start looking for trade from on Monday. Start framing yourself, and same thing here on Tuesday. All right. So and also you can align with key level also. All right, key level and close above. According to Romeo, week above means lower prices, week below means higher prices, close above means higher prices, close below means lower prices. So we all know that. So from this point, we reacted from this low, right? So from this point, okay, sorry, let me just put vertical line on this. So uh, we won't be using all this candle actually, but we'll just do the one that is there. So um, swept a low, right? Turtle soup a low into key level, which is the other block, right? This other block here. So this was the key level, all right? So if you have to look at this from the higher time frame, let me use the 12 months. Let me use the 12 months. Man, I'm having network problem. All right, so from the okay, all right, all right. So um, this is a yearly chart. Okay, this was last year, and this was this year. So we swept into. Okay, let me do the opening price of it, so you can see it's the same thing. So let me put this and change the color to green. So that was the opening. Oh no, so this one last year the growing candles. So um I would love to use 1 month. So everything um about ICT and CRT and Turtle Soup is just open, high, low, close. Then um okay, that's actually ICT, all right. So if you are to summarize ICT, it's just open, high, low, close. Okay, with key levels. Then um summarizing Romeo's concept like the Turtle Soup and the CRT is using liquidity points and time. All right, using liquidity points and time to position yourself in the real direction of the trade or the main direction of each candles. Okay, so with that being said, so this was the first month of the year. We swept a low, so we opened, rally into a low and into a key level, then bounce. All right, so um forget about the time frame. All right, so just look at it like um taking the 4 hour candle, and this is the 1 hour, this is 1 minute. All right, so this is like the 4 hour, the yearly candle is like the 4 hour candle, then this is the 1 minute. Okay, so just see like that. So the price is fractal, whatever is happening on the monthly or on the weekly or on the yearly or on the 2 years, any time frame at all, is the same thing that is happening on the lower time frame, the 4 hour, the 2 hour, the 1 minute, the 5 seconds, the 2 seconds, everything. Price is fractal. All right. So this is like an head start for you this January month. So this is like key level, right? Key level, liquidity point, Turtle Soup into key level. So both are also key levels. Mind you, Turtle Soup is also a key level. So this high is a level at which some dumb traders are putting their stop loss. All right, and this is like a key level. This is like a point at which there is enough order to deliver. All right, so it's not random. It's just logic. Okay, so let's dive into the months, and this is the yearly opening. So let's dive straight into the month. Let me put same line on this, but change its color. All right, so diving into the month. All right, you use the weekly to just frame yourself and see. So we have this general knowledge about the weekly, the monthly range actually. So to know the high of the month, so you have to focus on the first week or on the second week. All right, don't just focus on the second week. First week is also important. All right, don't allow anybody to deceive you and say Monday is not important. Monday is important, but you must be disciplined enough not to trade on Monday. All right, so if you really want to trade on Monday, then you can look for a 4 hour candle inside Monday and just take if you are actually willing to trade on Monday. Okay, so another thing is the first week of the month. Um, some mentors will tell you not to trade the first week. Actually, you can also trade the first week, but don't target the high of the first week or the low of the first week. You can just take one of like what I post on my Telegram channel. You can just take one classic daily range using the Asia model and your model. All right, just use your model on the lower time frame. Okay, so you need to learn how to improvise your model. The same way you use it on the higher time frame is the same way you use it on the lower time frame. All right, so Asia is like first week of a month. Asia is also like um first month of a first quarter of a year. All right, so Asia is the same usefulness, the same information that it gives. All right. So in a year, 3 months is the first quarter. All right. Another
we
3 months,
we
second quarter.
can say
Another 3 months,
Asia is
third,
a
and last
anchor
one, fourth
point.
quarter. You see?
Like we can say Asia is a anchor point, right?
Yeah. Asia is, Asia is what gives you an entry. Okay. So it's not compulsory that price will take out Asia high before you sell or take out Asia low before you buy. Sometimes price might break out of Asia high and retest the high and buy. You understand? So it's not, it's just like breakout and retest.
Yes,
Okay,
yes,
it's not every time
yes.
Asia gives turtle soup. Okay, but if the direction of the market change, so you're expecting price to take out Asia low and buy, or price um um okay, let me put it like this. If you are bullish in a market, all right, so you expect price to take out Asia low and buy from there. But if price didn't take out Asia low, then you expect price to break out of Asia high and retest that high, maybe a fair value gap around it or a breaker, then you take a trade. All right. So, but on the lower time frame, you will also see a lower time frame turtle soup, which is like um, let me call it butterfly model, right? You see a lower time frame turtle soup, maybe on the 1 minute or on the 2 minutes. You just see a swing guy being swept, and you can take your trade from there. But you have to be fast. All right. You have to learn how to be fast in trading. You have to have that speed of analyzing. Your analysis shouldn't take you more than um, 3 to 4 minutes to analyze for a day. All right, so it must be faster. All right, so okay, so this is all right. It's the weekly chart. So the year open at this point. All right, the year open at this point. So you can decide to start looking for trade from this point of opening. So this is like a key level order block at this point. So you left the first. Okay, let me draw out the first month again. Not sure it's, I drew everything. Okay. This one was not there. Okay, so I hope you guys are just, you understand what I'm, give you a head start. That's price is fractal. So this was the for the first month, we are already inside the key level. All right. So you expect a change in state of delivery at this point. So price closed above this candle here. All right. Price closed above this candle. This is like a full change in state of delivery. So this is like another block, and this is a fair value gap, making the other block stronger. Okay. So from this point, this is sorry, this is this is the first week, right? This is the second week. This is the third week. Okay. So this second week, all right, this low, you might look for trade from there, a buy. Okay, forming the low of the month. First week, this is the second week. So this formed the low of the month. Okay. Um this yeah, February. So this is February. First week, yeah, form the low of the month. All right, this low. This one form the low. March, second week here, form the low. All right. Base points. Third week, or I will call it second week here, because this is like both side closing. So on the weekly, it won't be clear. To be honest with you, you won't know when the first week is starting or when the second week is starting. On the weekly, it won't be very, very, very clear. But you have to use the lower time frame to see the actual opening. All right, there is there in every candle there is true opening. Okay, so for the daily, all right, for the daily, the true opening starts from 17. All right, the in the middle of the CBDR. All right, the true opening of the candle start from 17. Then you can start, but your broker will show you 00, which is after Asia. All right, but I want you to mark it from 17. All right, at that point, that's where you should start looking for trades from. Okay, so you mark out the pre-manipulation liquidity pool from that point. Then
Sorry,
you
17 is in
mark
New
out
York time.
your Asian time. New York time, yeah, yeah, New York time, yes.
Thank you.
All right, so um, okay, so due to
Sorry.
trading view won't allow me to come to this point on the
Hello.
lower. You say?
I said that the pre-manipulation liquidity you are talking about is the same thing as the Asia range, abi.
Yes,
Like
yes, yes.
you draw it and you expect price to take maybe Asian highs or low.
Yeah, into a key level or
Okay,
into a point of your standard deviation.
okay, okay.
All right, so all right, so um the lower time frame won't allow me to come to this point, so I will just explain these 2 months. These 2 months that just happened. All right, so I'll take this out. Take this out. All right, so this is June. This is July, right?
Yes,
Can you
yes,
guys hear me?
yes, yes,
All
yes.
right, so this is July. This is full July. All right, opening and closing of July. So the closing of every candle is the opening of the next candle. All right. So this month, how would you have taken a trade this month? Maybe from this low to this upside. All right. How would you have taken a trade from this month? So let's go to the daily. Okay. So so this is June. So all the trades opportunity in June, this is how it will be. So first of all, from the monthly first, let me just show you something. The first thing you should mark out on the monthly is price closing above each other, or is price consolidating, or has price wicked a high. Okay. Right now for me, I'm looking at price to do a change in state of delivery here, so I can know the high of the year has formed. So it's just what I'm waiting for actually. So this is it. Okay. So all right. So at this point, okay, this candle got closed above, right? So you close above this candle. Okay. You close above this candle. So the next candle, you need to anticipate a buy. All right. So you anticipate a buy, and inside this candle, actually, inside this candle, you you wait for a key level inside of it. So this month can test inside the key level, give you a range on the lower time frame, the daily, the 4 hour, and you buy from this point. Okay. So that's why it's useful for you to wait for week 2 and week 3. All right. So week 2 and week 3, you wait for a classic buy, right? Classic buy or a classic sell. So let's dive straight into it. So let me draw out this candle. Um, so use the weekly or the daily to get the key level for the monthly. All right. Then use the daily or the 4 hour to get the key level for the weekly, and you also do vice versa for lower time frame. the daily, use the 4 hour and the 1 hour, just like that. So I will refine this trade to an extent of taking a very nice sniper entry. Okay. Or even though it's not sniper entry, at least you'll be in the week of the higher time frame candle. All right. So the only key level, all right, we are seeing from this other candle here is this fair value gap and this other block here. Okay, this fair value gap and the other block. So let me do. Okay, so this is the other block. All right, and marking this as like also the fair value gap. Okay, okay. So that's the key level we are looking at. Okay, so expect price to tap into this key level. This is the only key level you saw. This other block and this fair value gap. Okay, so you expect price to, and you also want to see how price react inside this fair value gap on the correlating pair, which is let me look for Euro USD or DXY. Okay, or you can do that by yourself. Let me just go straight to the learning. So the week open here. All right. This was the first week, second week, third week, fourth week. Okay, so this is Monday. All right, this actually opened on Monday. So when I mean this is Monday, I'm saying it based on the weekly. All right, this is the Monday trade, the first week. You can also call it Monday. You can also call the first week. I also call it Asia. Okay, because they are all first week, Monday, Asia, on first quarter. They all play the same role, all right? But depending on the higher time frame you are working on, all right? So if you are working on the yearly, you are looking at your Asia as the 3 months, the first 3 months, okay? You are working on every time frame, all right? Every time frame, every candle, every higher time frame candle has the 4 quarter, okay? Like I don't know if I've taught you guys this before, but for the daily, we have 4 quarter, all right? So we have the Asia, we have the London, we have the New York, and we have the midnight, okay? Then we also have, that's for the daily. Then for the weekly, we have the first week, second week, and third week, fourth week, all right? So that's for the monthly. Sorry, for the monthly, we have first, second, third, fourth week. That's four. That's 4 quarter. For the daily, we have 4 quarter also, like I said earlier. Then for the weekly, we have Monday, we have Tuesday, we have Wednesday, and we have Thursday. Now, Friday is not part of the quarter because Friday is another price action on its own. Okay, so Friday is another price action on its own. It has different way of trade because it's just like another because on Friday you mostly see turtle soup, all right, do against what the other 4 days has done, or it continues what they did, so it's not part of them, all right. So for the yearly, we have the first quarter, second quarter, third quarter, and fourth quarter, which is 3 months in division. So let's go straight to the daily. So we've seen our key level, all right. So this key level, this is where we want to start looking for trades from, or eventually this other block here. So you expect price to come inside here before you start looking for trades. But that doesn't mean you won't take trade this first candle or this second candle. So how would you have taken trade here? This first, second, and third candle. All right. So maybe you want trade here, one trade here. Okay. So plan the higher time frame key level. According to Vittorio, he said plan the higher time frame key level. Mark your pre-manipulation liquidity. Then mark the manipulation time. Okay. 3. All right. So
Bro, I have
planning
one
the higher time frame
question.
key level is this. Yeah. Go ahead.
Yes. Can you please tell me that in order block, when we will mark the wicks and when we will mark the bodies as a order block?
Okay, so in other block, if the wick is longer than the body, right? So you mark the wick. If the wick is very long and it has a very small body, so you mark the wick. But if it has a short wick and a bigger body, then you mark the body. Or you determine it by on the lower time frame. So if there is a key level on the lower time frame, like inside the other block, there is a key level on the lower time frame and is placed in the wick, then you can mark the wick depending on the
Okay.
size of the other block.
Okay. And
You
bro,
understand?
yes, yes. And bro, can you please tell me like how we refine the key level, like in weekly, 4 hour and 1 hour? Can you please tell me how can we
Okay,
refine the key level?
okay, okay. Let's use this fair value gap as an example. Okay,
Yes,
so this is the fair value gap, right? On the daily, you also want to see another key level inside of it or time. Okay, listen to me. Time is very important. So the time at which price reacts into the key level and price also. So in this fair value gap, right? What are you seeing here?
there is a breaker block
This is a
maybe.
breaker. There's a
Yes,
breaker block inside the fair value gap, right? And
yes,
also, there is this swing low here, this low here, this one. So there's a swing low there also. So breaker inside fair value gap. You can also go to the 4 hour and see for yourself, see another thing to use. And also time is important, right? So before you take a trade inside the key level, you must align it with time, especially higher time frame key level. Okay, maybe the monthly fair value gap or the weekly fair value gap. Okay, so if you are using the weekly fair value gap, use day of the week. If you are using monthly fair value gap, use week of the month. All right, so it's just logical reasoning. You just have to align it with the same thing you do on the lower time frame. You just have to align it with the higher time frame. All right, because price is fractal, fractal nature of price of the market. Sorry. So let's see if we have something on the 4 hour to use. Okay, so first of all, there's a liquidity on the 4 hour, and there's also a other block on the 4 hour.
and
Okay.
one is FPG.
Yeah, with every right?
Yes,
So that makes this other block stronger. So at this point, you can mark the body because the wick is small.
yes,
So you can mark the body. I see price tapped into the body, right? The wick also is for for confirmation that the other block is stronger. So everything is aligning with higher time frame. So this yeah. So this is the opening of the first day, the first week. So it's June, Sunday. So it's June. Okay. So we took out this high, right? Took out this
yes,
high on so it's on the Thursday. Okay. So you can actually take this trade. Took out this high, you sell to this point. Um other block here, right? Took out this low, key level. This happened on Tuesday, so you could have taken the trade. Another one, we took out this high, right? Maybe SMT. This happened on a Thursday, you sell. But the main move of the week, right, happened here. So we've not gotten to this favor to this other block yet. Okay, we've not gotten to this other block yet. So you wait for price. Okay, you wait for price, and Monday you mark out Monday. Okay, this is your this is your point of interest. This other block here is your point of interest. So Monday you mark out the first week. All right, the first week. You mark out This was the first week, Sunday, Monday to Friday. Okay, Friday. Okay. So the low, right? This was the range of the Monday. So this was half of what? This 1.5. All right. Forms is either one or two forms the high and low of every month. Okay. Like this is like ideally. I'm not saying you should take it as a pattern. So you only want to focus on the one and two. Might bounce into 2.5, but from 1 to 2 you expect the high or low of any higher time frame candle, or let me say from the monthly, the weekly and the daily to form. So, and if any of these points, maybe like the 1.5 is a key point, so, and if any of it is aligning with your point of interest, which is this order block here, then you know this is right. Then your stop loss can be in two. Okay, the stop loss can be in two, all right, or half of these two. Okay,
Okay,
so
bro. Like you mark the standard deviation on Monday, right?
yes, of the first week, not Monday, the first week. This is the
Okay,
first week, right?
okay,
Second
first
week,
week.
this third week, and this fourth week. Yeah.
So
So
we
because I'm using the monthly, that's why.
yes, like we are playing the monthly
Monthly.
candle, right?
Yes. So you mark the standard deviation of the first week.
And if we play weekly range, then we have to mark the Monday range.
Yes, exactly.
And if we play the daily range, then we have to mark the Asian range, right?
Yes.
Okay, bro. Bro, like
All right. So
sometime Asia will expand. Okay, then maybe the range is bigger than expected. So how can
yes.
we mark? How can we mark these things to keep in mind to take the trade that time?
So at that point, at this point, okay, you mark the Asia actually. Mark the Asia. Then you expect it. You okay, there should be a key level, right? If this cell, sorry, hold on guys. So you mark the Asia, all right, then you expect 1.5 to, okay, minus 1, 1.5, 2, and 2.5. You expect to see it around the key level. Okay, you expect to see it around the key level, any of it. Okay, so you can place your stop loss in the next deviation. All right, but if any of it is not in the key level, then you skip that day. All right, you must be disciplined enough to know when to trade and when not to trade. So at that point, you
Okay,
dump your bias. You don't have price, because price will give you an entry sometimes, and it won't give you an entry also. So at that point, you stay out of the chart, or you check the next pair. All right. So if you are trading maybe GU and you didn't see anything there, and you didn't see anything also, then you can go to any of your second favorite pair like gold or your USD card or Euro card or whatever pair. But I'm also convinced that if EU is not clear, I'm very sure GU will be very clear. Okay, so it's just like that. It's just so simple like that.
okay,
Um,
bro. Like
so this
uh,
month, all right.
uh, in your every trade, you use standard deviation or not?
I used it in all my trades. I use it, but it's not every time you. It's not every time it gives you what you need. Okay, sometimes you just have to stick to time. Okay, if you are convinced about the bias, sometimes you just have to stick to time. Okay, but it's just like confluence. Be
Okay,
precise. You just it's one of the tools you need. Okay, It's not something you should focus on. Like every time you're looking for standard deviation, you want to take all the moves. No, 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 no. Use it to confirm where you are looking at, to confirm your point of interest. Okay, and to also place your stop loss at safe point. So
Okay.
let's go straight into this week. So I'll be marking out the opening of the weeks. So this was the first week. Okay, you can see I'm not using the weekly candle. I'm using the 4 hour so that I can mark it correctly. So this is the first week. This is May. This is June. Okay, so the first week Sunday, and you are marking it on the next and closing it on Friday. So on Friday, yeah. All right. So 17 marks the
Sorry,
opening of the next week. So
sorry,
you
Zion.
mark it on the
Sorry to call
opening
you
of the
back.
next week. So the closing of the first week is the opening of the second week. Okay. So mark the second one. Let me change the color to, okay, this was the opening of the first month. So change it to green or red. Okay. Opening of the first month and closing of it. So this one is the weekly. Mark the second one. Monday, Sunday 17. Right? So mark the second one, Sunday 17. Sorry. June, July. Okay, so this was the first week, the second week, third, right, and the fourth. So week one, let me write it out. Sorry for the delay. I'm just doing something. Okay, we all know this is week one, this is week one, this is week two, this is week three, and this is the fourth week. So let's go to the maybe the hourly chart or the 30 minutes. Okay, let me use the 50. Learn how you trade each of them. In every month, there is always enough trade opportunity. Okay, if you only use the daily range, you must see a trade in a week. You might see two trade in a week. You might see three. All right, you will see enough trade for you to trade during that week, but you must learn to stick to one thing. All right, it will always happen, but the time at which you are waiting, all right, you have it in your mind that it won't happen, it won't happen. Let me just trade. It's not like that. Patience is um is the key. Okay, you must learn how to be patient, to wait for your setup, and it will happen. Just have that mind. It has been happening and it will always happen. Okay. So let me spring back. I'm really having network problem here, but you guys can see I'm trying my best to just. It's really slow, but just bear with me, alright? June.
Click that auto button on your screen on the right hand
You
corner.
see? You see?
I said maybe you should try to click the auto button on your screen in the right hand corner, bottom right hand corner.
This one. Okay, don't worry. I just want to. Okay, so this is the first week. Alright? This is the first week. Okay? So this is the very first week. So we have 5 days, right? So Thursday, second, third, fourth, fifth, and it ends there. So how would you have traded this first week? You know you are a day trader and also you are a weekly range trader. So this is the first week. This was Monday. This was um the first Monday trade. Okay, so this is the monthly range. This is the Asia range. Sorry. All right. So you can see Monday is not really clear. Okay, so price just open London, boom. Okay, and it ends like this. So that was Monday. All right. So on Tuesday, right? That was Monday. This was on Tuesday. So on Tuesday, Asia opened. This was it. So this the true day opening was here. This 7 o'clock was the true day opening. But your manipulation time is Asia. So that's from 20 to 000. Damn, what the fuck is this? Oh, I'm fed up of this kind of network. And it was very fast this morning. Shit. Just hold on, guys. Let me finish with this shit. It's taking long enough. Jesus. You can see that buy was an Asian range model buy. Very clean and smooth. You wouldn't have missed that trade. Had it been you're an Asian range trader, you wouldn't have missed the trade at all. But you guys can hear me, right?
Yes.
Oh, bro, it's crazy. It's actually raining here, so network is just so fucked up. Okay, so this was the first. All right, so the first week, right? This is it. So this is Monday. So you skip Monday, as I told you guys to. You skip Monday. Okay. So, but make sure you mark the Asia. All right. So Asia didn't give any trade setup for your model, so you skip. All right. So sorry, let me remove this. So you skip the Asia. You skip Monday. I mean, since Asia didn't give you any of your entry model. All right. This is not an alignment with your bias. But Asia also serves as point at which you can look for trades from. Okay, so it should also serve as that. And since we closed above last month, every of your moves should be bearish. So we are looking at bearish, but not the first week. We're not looking at bearish on the first week. This is our point of view. So we are looking at this point, this other block. So that's where we want to look for trade from. But price is not yet there. So you just trade your daily ranges, all right, and stick to your 3R model target. I mean, so this was the Asia, right? So price closed above Asia, all right, consolidate above it. So Asia just be like let me say other block. So if you go to lower time frame, you will see this Asia as a key level. Okay, so you mark it out and price react from Asia for a buy. So on Tuesday it opens. All right, you mark out the Asia again. This is it. Okay, sorry, that's Asia high. And also you can also mark all these highs together also. All right, because price open from here, so you might mark everything. So this is Asia and this is Asia low. All right, so um draw your deviation. Okay, yeah, so 1.5. All right, so
Bro, like
all right, another
we
point.
we have to align 1.5, 2 or 2.5, right? Audible.
What do you say?
I said like we have
Yes,
to
yes, yes, yeah,
focus
you're
on
audible.
standard deviation 1.5, 2 or 2.5, right?
Yes, 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 exactly.
Okay.
So um there's a key level around here. So for those of you that can go back, this point is a key level. All right, so this point is a key level. So the only deviation that is aligning with this key level, okay, you can call it a breaker if you want. So this is a breaker actually. Yeah, okay, it's a breaker. All right, so that's the key level breaker. So the only deviation that is around, okay, breaker is 1.5. So that's your target. That's where you want to look for entry from. And 2 will be your stop loss. So if this is your entry, then 2 be your stop. All right. So so you can, and this happened during key time also. Okay. So we took out Asia low into a key level in our standard deviation. Then okay, this is the key level actually. So let me just shift it out. This is all right. So this was London low. All right. So this happened after 5. Now trade happen, good trades. All right. So if um during 3 a.m. okay, price didn't take the low of the Asia. So this was price took it during 1 a.m. But me, I always like it when price take it during 3 a.m. Okay, the low or the high. So price didn't take the low of Asia, and price didn't take the high also during this 3 a.m. So my next time I'm waiting for is 5. All right. So any swing low I see after 5 a.m. So this swing low formed. This one formed during 2. I'm not looking at it. I'm looking at it if price consolidates inside here and sweep the low into this key level here. Okay, but this low was formed before 5. So after 5 a.m., this was when 5 a.m. opened, and after 5 a.m., price took out that low into key level. All right, and this low was above key level. Okay, this low was above key level. All right, or even though it's already inside the key level. All right, but the opening is good for the breaker. So this opening price was above it, and took it after 5. So these are like 5, 6, 7. Took it into the deviation 1.5. Then you take a buy from there, and this happened during key time. Okay, so for those of you that would have missed this one, this is where you can now use model 1 at this point. Okay, so this was the model 1 for it. I just take notes, guys. I've not um done this by myself. This particular learning, this particular teaching, I've not opened the chat and be like, okay, let me see how it works. Okay, I might open. You can decide to tell me any random pair, and I'll still explain same way like this. Okay, before I teach you guys, I don't study the pair. I don't study this particular price action before I come to teach. I just open it as random and I teach it because I trust my model. Okay, so for those of you that would have missed, or maybe you are scared of this trade, okay, model 1 will give you confidence. So you take your model 1 stop loss here, the low of this candle, or you can put it at this middle point of this point, this range, and this your SL point. You can put it at this middle point. Okay, then you ride the wave to the upside. Okay, so you actually call the low of the week, the low of, not the low of the week, this was actually the low of the week. All right, this was the low of the week, but the significant low of the week. All right, where price actually bounced out from with your model. You cut it from here and you hold it. um um let's look for a key level around. So you hold it to this point, this high. This is like an equal high, so a lot of liquidity resting there. This sell, I actually took this sell on my, this sell here, this sell is on my Twitter. I took the first trade from here, second one here, third one here, and yeah, I closed. It's on my Twitter, you can go and check it. Then Zach took his own from this point. This is what he marked. I was shocked. I was like, how could somebody mark this? This is what he marked. Well, reason best known to me. He would have taken this trade after London. This was Asia, then London. If you check maybe DXY or GU, maybe this is like SMT. So just like that. And this is another example. Price closed below Asia, right? Close below Asia, come back into Asia range, using it as a key level, then bounce from there for a sell, right? So it's as simple as that. So key level gives you direction. It gives you an head start. Okay. So without key level, this model won't really work. Okay. And take note, your target is 3RR. So if you are convinced that price is actually on a good move, so you can take partial at 3 risks to reward, then you hold the runner for maybe your target. All right, but you must make sure you pay yourself. Always pay yourself as a trader. Okay, you deserve to be paid because you've analyzed, you've studied, you've spent time on the charts. All right, so you must pay yourself. So once price has hit a 3R, or it has given you more than your risk, okay, make sure you pay yourself. All right, I always pay myself. I took a buy on BTC USD. I don't know if you guys, that low of the, was it low of the month? Yeah, so low of the month, low of last month, sorry. So I took the buy and I paid myself 6 times. All right, so make sure you pay yourself. Don't say you want to impress me, so you want to hold your 10 lot size entry until the high. No, it's not done that way. Pay yourself. Okay, that's why you see me, I don't usually show my execution arrow. That's because I pay myself a lot. So if I take the first trade, it will look so disgusting. So I take enough partials. All right. So
Bro,
so this was the first one.
how much percent of partials you took the trade? Like it's 90, 80%, how much?
Okay. If I'm looking at if my bias is from the higher time frame, so you are holding trade for a very long time. So um I do take the first partial. All right. I take out my risk first of all. Okay. So what I risk and a little, maybe I risk 6,000. So if I'm to take the first partial, if price is at 7,000, okay. So I take out 7,000 first. Okay. So I've taken my risk with an extra 1,000, and price kept on moving. I can take another 2,000 profit. Okay. And I can also take more. So I'll calculate the percentage and just post it online that I've taken almost 90% of the profits. All right.
Okay,
So
like
yeah.
you took firstly your SL, stop loss, right? How much you took, like risk?
Okay. My stop loss, which is my risk. My risk was was around 800. Yeah, 400 and something. So I took out 800. Okay. And the second one, I took out 200, and you can just decide to take any, but make sure you've taken out your risk first of all, then you break even. Okay. So you first of all you protect your capital, and secondly you still make money with it. So it's just like you cheating the market. Okay.
Okay, thank you, bro.
All right. So this is the first trade. Okay. Now this is like bullish for you since Tuesday formed a significant low where you took a buy from here. Then this is the second trade you will have taken with the same model. So this is Asia. This is Asia low, I guess. Nah, this is not Asia low. Let me draw it again. Sorry. Okay. 00200. Okay, this is the I. So okay, so this is Asia low. Oh, sorry. So that's Asia low. um, so price took out Asia, right? What would have been your key level? So I'm very sure this is an order block. These are consecutive sell candles here. These are consecutive sell candles, and this is a weak. This is a rejection. A rejection block. So the lower time frame is like another block. So and this is also another swing low at this point. Okay. So highs and lows also are also key levels. Okay. Those are they are called the external and internal ranges. Okay. Highs and lows are called external, and ERL is also a key level. IRL is also a key level. Okay. So this is also a key level, and yeah, the standard deviation, mark it out. Okay. So at this point, there was no entry for you here, so no problem. But me, I took this buy. I won't lie, I took this buy because we're already in a key level actually. So this rejection is a key level, and this 1.5 is placed below the key level. So if price is to come here, that means it will definitely sweep out this order block, this rejection, but which will make it so invalid. All right. So I took a sell around this point, Then I placed my stop loss at this middle point. Okay, this middle point. That's where I placed my stop loss at, and time also. All right. So this was good time for a trade. So, but if you missed, maybe you missed. All right. So these two consecutive sell candle here. Let me remove this. So if you missed this one, maybe because price didn't reach your 1.5 standard deviation, then you say okay, it doesn't give you an entry. So the next thing you wait for is the other block. Okay, so this is this first candle, second candle, two consecutive close candle, down candle is another block also. Okay, so that's the other block. All right, so you'll have taken a trade on New York time. All right, you can see everything is aligning with time. Okay, New York time, you take a buy. So your first trade was from here, first trade here, stop loss here. So you'll have shift your stop loss for 32 traders. Your stop loss is here. For other block trader, you can decide to put your stop loss here or these middle points. All right, so you shift your stop loss to your entry point, and you've taken partial at this point. So this point you took partial. Oh, sorry, this point, I mean this high, you took partial at this high, and you are convinced about the bullishness. So this was during wrong time. You can see a lot of persons will have taken a sell from here. The total pattern traders would have taken a sell from here, but you can see price came and sweep out their stop loss and came back to other block for the New York traders to buy. So first trade here, break even, you took partial here. Second trade, you took another trade here, and boom, to the upside. And your target for the second trade, is this equal highs here. Okay, this equal high. This was a Monday high, so price took a Monday high and came back. Okay, so this was the third trade. Okay, this was Asia. Okay, markouts. Okay, this is the high. Let me mark out from the high. Okay. Shallow. So price didn't take out Asia low, but I'm sure if you check EU, you should see something like that. See something, but doesn't give you an entry, so no problem. So you ride it up to this side. This first of all, your first trade, the target for partial is here. The second trade partial here. Okay. Then your third trade partial. Okay, maybe you didn't take a trade from here, so the partial is here. Or yeah, you close because this is already Thursday. So on Thursday you close your trade. All right, Thursday you close your trade. It's as simple as that to cap the week. All right. So if price didn't give you a sell here, a buy here, all right, and price hit your key level, so you might decide to draw a range or something like that at this point. All right. So you can just no, draw from the high. So at this point you can just draw a standard deviation range, and you can see it got to the 2.5 and hit the 3. So this was not valid. This is not a valid trade for you. So you TP at that high. And this was Friday. So this whole sell move is none of your business. Okay? This whole sell move is none of your what? Business. Okay? You don't need it. Alright? So you've taken good trades from this point with your model. This is the ability of sticking to your model. Alright? You took how many trades in a week? 2 trades, and that's it. And you make money. The aim is to make money, it's not to catch every move of the market. Every move of the market is none of your business. All right. Some traders will have taken this sell, but that's not your business. You have to mind your business. All right. You have to be disciplined enough to mind your business. This is the only business you have with the market. These trades here and this one. The rest is none of your business. All right. So this was we took a good trade from here, good trade from here. You are good for the week. So this was second week, right? So it's the opening of the second week. So your aim, all right, is to take is to use the daily at this point, all right, to check where you are going to take trades from. Okay, this was like let me say break of structure. This point, so price took out this high, took out this low, and come back into this point and sell. So how would you have taken a trade this Monday? So use key level, daily key level. Okay, so there's a key level there on daily for this sell. I'm very sure of that. Or on the 4 hour, there is always a key level, but there's no time for me to go and check that now. So mark the Asia. That will be your work. That will be your work. Okay, that will be your work. Make sure you do the assignment. All these things I didn't mark, you have to mark it by yourself on your chart. So I won't always give you everything you want. You must also work too. All right. So the more you backtest, the more you execute, the more you are good with execution. Okay. That's why you see me. I always take trades on all the pair I love to trade. I love to trade the EU and the GU and gold. So any opportunity I see there, every day I take it because I want to be good with execution. All right. I want to be good. I'm not that good with execution. All right. I'm not that good. I suck when it comes to executing trades, but I want to be very, 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 very good with execution. All right. So even though I'm taking good trades, don't tell yourself that you are good. All right. Keep on chasing consistent. I'm a consistent profitable trader. All right. But I'm not satisfied. All right. It's as if there is something I still need to know. All right. It's as if there's something I still need to know. So that's the drive. That's what drives me. All right. And I still watch Romeo's video. I still watch his video because the more I watch, the more I see things. All right. So this was Asia high. Got taken out at this point. All right. Asia high was taken. Nice takeout and okay. So at this point there is a key level. At this point, you can also use this swing guy as your key level also. So you mark out your standard deviation. So the 1 or the 2 ideally are to form the high or low of the day. So for me, like from the 1 to 2. So this point, you draw out your standard deviation. All right. So price almost tap into this. Okay. All right. So this was a swing high for you. All right. So these are like Friday high. This is the true high of Friday. Okay. This is the true high of last week. So Monday swept it. But actually, this is Monday. Okay. Like I always said, don't trade on Monday. But this was a clean trade setup. But let's leave it. Don't trade on Monday. I took this sell also. Okay. Last week. This week, I took only this buy. Only that I didn't take this one. I was not around, so I took this buy only and I target this high. But I took partials at this point. All right. I took partials at this point, but I target this high. So for this one, this buy, this sell, I took it also, but I closed here. Now this was a trend line liquidity. All right, this was a trend line liquidity. So price will surely take them out. So now every of your entry points, all right, price always looks at it. So this is like a trend line liquidity. Price come there and take them out. So another thing for you to frame your target is anywhere you see a clean and a clear turtle soup trade, all right, and maybe it's far from where you are. Maybe okay, you are seeing a turtle soup trade below, all right, below turtle soup trade here. This one at this point, turtle soup below. Then you expect price to come there and sweep every of the turtle soup trader out. All right. So don't say turtle soup is the main head of the market. Yes, but the market maker, they also know about turtle soup trader too, because we've been so noisy on social media, especially X, and they are there. So they know that a lot of turtle soup trader are in this trade. So, but they can't take us out now, because if they take all the turtle soup traders out here, they also be on drawdown because they are also turtle soup traders. So they will have to move in the direction. Some turtle soup trader with impulse and emotion in their mind, they will be like, oh, this is all-time high. This is everybody just talking this high is all-time, because of the sharp move as which price moves to the upside. So they will come here. You can see the speed at which they took out everyone's everyone out of this. This low is the point at which some buyers are. All right, so price took them out with speed and bounce up to the upside. So um so on Tuesday, this was Asia. This was Asia on Tuesday. Sorry, Monday. Okay, yeah. On Tuesday, this was Asia. So this sell, all right, we didn't take it. We didn't take the sell. Um, due to you didn't see your model, but yeah, you didn't see your model. So you, you would have taken this buy actually. Okay, this buy because New York swept Asia low, so you can take a buy and hold for 3 hours. This is exactly 3 hours. Okay, exactly 3 hours. So, but let's keep Monday. So this is Asia for Tuesday. So yeah, sorry, taking time. All right, so this is Asia. This is Asia low. Okay, so I guess this is like a news or something. I don't know. So price took out Asia low, right? Took out Asia low, and you mark out your standard deviation. So at this point, the two is in alignment with a key level around. All right, this is like a key level opening of the week. So price came back to the opening of the week. This was the opening of the week. So the key level around here, the two is aligning with it. So this would have been your entry point. Okay, these two would have been your entry point. Then this 2.5 will be your stop loss point. But just know, all right, instead of you to put your stop loss at this 2.5, all right, you put it slightly in the middle. Okay, so that's like a safe way of no. This was on Tuesday, so the low of the week is in. All right, so you take a buy from there and boom to the upside. If you miss this one, if you miss this, maybe it was not really clear to you. All right, I didn't take this trade actually. I only took the sell. Okay, I didn't take this one, but I took this one because this one was very, 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 very clean. So this was other block around this point, other block here. So that's another block, and this is Asia. Man, I'm exhausted, bro. So this is Asia. You can mark it from this high actually. It's closer. So this is Asia, right? So price took out Asia. Right? Price took out Asia. You mark out your standard deviation. So price didn't give you an entry. It was just middle point of this 1 and 1.5. So the middle point also is also a good entry point. Okay, because I said from 1 to 2.5 is so this middle point also you can also take trades from there since it's aligning with your since it's aligning with your key level. Okay, so you can take your trade already. If your key level is far, all right, then you need standard deviation to give you confidence. All right, but the key level is already maybe price is already inside. Okay, because this low is already inside this key level already, and I'm sure there's something like SMT around here. Okay, so all this, all right, you go to your charts and go and analyze everything with yourself. Check for SMT. If there's no SMT, then you know the trade was valid because of this other block here. All right, and if you are not convinced enough to during this London to take the low of the day, then New York, you should take the other block. Now look at these three consecutive candles. All right, this 1, 2, 3. This buy candle here got neutralized by one of it. Okay, so you see another block. So this is a full other block here. So you could have taken a trade, another block trade from New York and ride it up, all right, to the upside.
Bro,
Okay, yeah,
can we use CBDR to use standard deviation?
change instead of CBDR. Yes, yes, you can also mark it too. Yeah, you
Yes.
can mark it too, but you must mark it from 17. So it must be from 17. All right. So you can mark it like this, not from 16, from 17. All right.
Yes,
So
like
this,
CBDR is 16 to 8.
yeah, I prefer to mark from 17.
Okay.
All right. So this you missed. For example, you missed this. You also missed this, right? Then this was was so classic for you, and you take this one. If you miss the total super entry, then you take the other block entry, right? And you can see how fast it is. Went straight to the upside. So this other high would have been, so this high is now 1, 2, 3, 4, 5 will be your key level, right? So that's it. Take a buy. And also the first buy, this was on Thursday. This was Wednesday. And Thursday, another clean trade also came up. So this was a share. Mark it out again. Now you can see I'm not hiding anything from you guys. I'm actually teaching you how you take correct entry. So you can mark it from here also. How to take correct entries. Okay. So
Can you
this was the
share
high of
your
Asia.
bro? Can you share your standard deviation settings?
Uh, well, right. So just edit your fair value, your Fibonacci.
Yes, like mine is starting from 1 0, then minus 1, 1.5, minus
Yes,
2,
yes, yes.
minus
It's
2.
correct. So use -1.
So we have
Use
to.
-1, -2, 2.5.
Okay.
Sure, you have -1, you have -2, and you have 2.5, right? Use that 3. All right. So this is Thursday. All right. So this was Asia low. Price took it out. First of all, it was taken out. All right. So you mark your standard deviation. Now this point is a swing point, are you? So you expect price to take this place out before we buy. All right. Do maybe during London during key time. All right. So that's one of the low you are looking at. So if your standard deviation is in alignment with it, then it's a valid one. So
Hello.
so you can see two is in alignment with it.
अवेले क्या कर रही है?
Hey, mute yourself, bro. If you want to make call, mute yourself. So um two is in alignment with, is near, all right, is nearer to this swing low. And there's also another block also. So this swing low got taken out first of all around 2, all right, which you expect the high of the day to from here. Then also a key level is backing it up here also. This is like a proportion, or you can call it other block too. Okay, which is around key points of the standard deviation. So you take a buy from that point. All right. So from these two, this is where you take a buy from. Then 2.5 or middle point of 2.5 is your stop loss level. Okay, then you ride the wave of Thursday, and Thursday closed here, right? So, all right, so Thursday hit your point. So you can also see 2.5, right? Is also in alignment. This high is also in alignment with this high, which means formed high of the week, right? Which formed the high of the week. So 2.5 formed the high of the week, and 2.5 at this point, right? Formed low of the week. You can see how it works together. All right, look, this was 2.5, right? You can see this one, 2.5, low of the week, right? Okay, low of the day, sorry, low of the day, 2.5, high of the day, sorry. Okay, so that's it. Nice trade. Yeah, it was actually for the week, right? Okay, these are the weeklies. Okay, sorry. This is 1 week, this is 2 week, this is 3 weeks. So last week from this trade 2.5, one of them aligned with it, formed low. Then the high also was formed during 2.5, one of these key levels here. So the high of this week also formed during 2.5, this second week, and the low also formed during 2.5. So you can see the alignment. If you actually trade well, it will align with each other. All right, that's the arithmetic of trading. So now your assignment is this week, this third week, you go and check. Now this buy, this is one of the classic Monday buy. You can see this. I took this buy too. Last month I was so crazy with GBP. So this was Asia, right? This Asia, you can see it. Okay, the price took out Asia. This point will have taken a trade from this point because of Asia also aligning. Asia alignment. This one also. Every of those swing points you are seeing, you can see Asia, London took out Asia, bounce. Same thing at this point also. SMT with that one. So this one was Monday. Okay. So some pattern traders will have taken this sell, right? Pattern trader will take a sell, right? And put their stop loss above. But no, we are in a key level. Okay. So price, we are around that key level. So price formed a low. So this is like a pre-manipulation low, pre-manipulation, then manipulation time. So pre-manipulation swing low, yeah. Pre-manipulation swing low. Manipulation time, opening, right? Then daily manipulation time, Asia, right? Then other block from the 4 hour fair value gap on the higher time frame. That's the key level. So price swept it during what key time. So you can see everything just aligned, time and price. Okay, there's nothing random here. So price swept that low and draw out your standard deviation. This is the last I'll teach. So draw your standard deviation. Now you can see it's in alignment with 1.5. All right. So the key level is in alignment with 1.5. So price took out the 1.5. This was the full body. Okay. So at that 1.5, your stop loss level will have been 2 or middle of 2 to be safe. Okay. So from there you bounce. You can see how smooth it is. So Tuesday, no trade opportunity. Only on Wednesday. So we had another trade opportunity on Wednesday, which was from here. So go and backtest it by yourself and send me your chart. Any of you that did not send me this chart or this analysis for this buy and for this sale, all right, this sale that happened now, this buy and this sell. Any of you that refuse to do the assignments, I will make sure I flog you with um I don't know. I won't flog you, sha, but you're not doing yourself good. You're not doing yourself. Make sure you submit it today, tomorrow, before the next class. The next class is Saturday. Make sure you do it, and so I can correct you and you know seek information with all you got. All right. So yeah, what was the question? The what? Today's chat. Today's weekly chat. Okay. 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 Yeah, here you go. So okay. Trade breakdown for yesterday trade. Let me do that quickly. So this is like a sell. Okay. So we are in a downtrend actually. All right. And we are about to get to a key level, which was here. This low. This low here. So about to get to a key level. So let me take this out. Take this also out. So um this was the Asia range I drew. All right. So I drew out this Asia high. Sorry. So this was the Asia I drew out. And I put my sorry. Okay. So now price didn't tap. Price sweep out Asia high, but didn't get to the key level during this time. All right. So I waited for news to happen already because news might fuck you up. So always wait for the news. This is news day. All right. So this high is looking so clean. This was 3 p.m. high. So price didn't sell from here from this point. So I waited for news to happen. So this high was swinger. It was the swinger, and this is a key level. Okay, this was a key level, right? And this was Tuesday. So I wait for price to sweep out this high during the news, and it was during 5. All right. So after 5, this was the high was formed during 5. So after 5, price took out this high during New York session, and I sell from there. There's nothing random, and this is like a breaker also as a key level. Okay. So for those of you that took a trade, maybe you took this turtle soup here. All right. Took this turtle soup here. This one. Because that was I marked first. But since it's about to is time for news, so I waited. So this high should have been this place, this fair value gap high, or this high would have been your stop loss to be on the safe side. So for today's trade also, uh, this was it. So the Asia, right? So the Asia low. Sorry, that was Asia high and low. Then this was fair value gap. Okay, so the fair value gap. So this is what I actually marked. So during London, to position myself in a sniper entry, I also marked the swing guy also. Butterfly model. This is what you discover by yourself while you are learning. So this high, marked it out for the Asia, and there you go, 1.5. Price tapped into 1.5 during key time. This was 2:30, yeah, 3 a.m. So now price is at other block. For those of you that missed this sell, price is at the other block. So target your sell from this point. So I'm sure this is New York, but this is not really happening during New York. So you wait for New York to open there itself. All right, so that's it. And other trades also for like this long sell. Look at it. You can see it aligns key time. This one there was no trade for Tuesday. Look this one. Asia, London took it out and start selling. Sell to this extent. Asia, London took it out. Sell. So it's Asia, right? This was Asia. SMT with New York. Sell. This was Asia. And this was a classic. You can see this one is classical, right? Sell. Nice sell at this point. This was Asia. London took it out. New York took everyone out. Consolidation. Asia, London, boom, to the sell side. So you must see a trade in every of this week. You must see 2 or 3 trades in every of this week. All right. So that's it for today. So I want you guys to go back and do a proper analysis on this sell. Okay, from this top, do a proper analysis on it, and also this one, do a proper analysis on it. All right. So done. I hope
uh,
you guys
bro.
understand things. Yeah, yeah.
Yes, like, bro, can you mute? Can I put like, can I send a homework related gold?
Yes, yes. You can send your homework on EU GU Go. Just exactly the same model. Send it
Okay,
for me from
with
any of
standard
these pairs.
deviation, right?
Yeah, standard aviation, key level, SMT.
Okay, bro.
All right. So you
Like,
just indicate it.
what is the key time of like London and New York to be purged?
Okay. For London, I prefer from 3 a.m. All right. From
Okay,
3 a.m. So from 3 a.m. 5 also. Then sometimes 8, sometimes 9. But 3 and 5 is very nice. But just inside any price action you see, it's just like, see, it's something you look at. All right. Once you see it, once you see, you can't unsee. That's what Rumi always say. I understood this. That was last year. Once you see a good setup, you will know it looks like a pattern, but it's not actually a pattern. But it looks like a pattern. All right. But it's not a pattern, but it looks. You will just know. This is a good sell. This is a good buy. All right. So
okay, and
you will know once you see it.
like in every setup we can find the SMT, right? If SMT is not available, then no trade, right?
No. All right. It's not all setup that will give you an SMT. SMT is for confluence. All right. Not every setup will give you SMT.
Okay,
Okay. Not every setup will give you SMT, but make sure you check for SMT. All right. But once all the criteria has been met, but you are not seeing SMT, it will still play out. But SMT just like full confluence, full confidence for you. Okay.
okay, okay.
Yeah, yeah.
Because me,
So
Bro,
who wanna ask?
your voice is
okay,
very
I
bad.
said that. Thank God you cleared that because man, I always say that if there is no SMT, I'm not taking the trade.
Don't patent. There's some SMT you even see it will still work. All right, it will still work. So don't pattern trade SMT. Use it as confluence, not
Okay,
model.
okay,
It's just like confluence to see. You just want to see to give you 100% confirmation that okay, this it has just 5% of confirmation to you. It doesn't add much. It's just the last thing you look for while you are looking for a trade.
But we have to use
But
standard
time is very
deviation,
important.
right?
You say?
Standard deviation, like, but we have to use the standard deviation with time, right?
Yes, yes, yeah, exactly. With time and with key level.
Okay.
All key level are important, all right? And
Okay.
you must follow um higher time frame. Um Let me say you must follow the higher time frame order flow, all right? Must follow the
Okay.
higher time frame order flow with
Uh,
time and key level.
standard deviation points are like -1, 1.5,
Yes,
and
minus
2.
one. Yes, minus
Okay.
one for your own type of fair value Fibonacci. Use the -1, use the -2, and use the -2.5.
Okay. If like my trade
The
align with,
midpoint.
yes,
Yeah, you
like,
can use the midpoint of -1 and -2. Midpoint
okay.
of yeah, you can use the midpoint. You can use -1. You can use -2, and you can also use the midpoint of -1 and -2.
Okay, like if my trade align with 3 or 4, then no trade, right?
No trade, no trade, no trade, no trade, bro. No trade. It's too far. It's too far. No trade. Just leave it. Leave it.
Okay, bro, thank you.
Yeah. 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 Okay. So you only consider the key level. All right. So um you once you are confused, all right. See, I will tell you one thing. All right. Once you are confused, maybe you are seeing one PDRA above, another PDRA below. Once you are confused, don't trade. Look, this is what is stopping most of you from being profitable. That's the only thing stopping you. You just want to trade every setup. You are not the market maker. You are not one of the smart money. You are not ICT. You are not Romeo. You are just somebody that wants to make profits. All right. So you making profit is you must be strong in your mind. So you don't need to start taking all the moves in the market. Once you are confused, just stay out of the market. All right, stay out of the market to avoid loss. So you might be wrong, you might be right, but to avoid any silly mistake, just stay out of the market. Go and do any other thing with your family. Go outside, go and play football, go and watch movie, do something. You can even sleep, or you can go back and watch any of my video or Romeo's video. But make sure you don't trade that time because you are confused at that point. Once your brain is not fixed to what the market is doing actually that time, just stay out of the market. All right, stay out of the market and wait for a clear setup. Yes, that was because it's news day. All right, that's because it's news. Yes, 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 yes. No, not really multiple touch. All right, just wait for the first leg of the news to take out a high or a low in line with your. Are you listening to what I'm saying? Take the first entry on the news. That was what I took now. The first entry is what I took. The first move gave me an entry, and I took it from that point. Okay, 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 okay. You are not understanding what I'm trying to say. Look, the first move, all right, the buy was don't take the buy. Is that what you are trying to say? Don't take the buy. So allow the first move to take out some highs and key level. All right. Yeah. Then you cannot take trade. So the first move will give you, we position you in the trade. So allow them to take out some buyers and some sellers like temporarily before you sell. All right, and make sure you look, go and check all the NFP news. Go back, see, you must put in the work first of all. All right, so go back to last month, 3 months ago, 4 months ago. Go and check all the news, the high impact news, actually, the um the CPI, the PPI, the NFP, the FMC, all those news, all those high impact news. Go and check how they behave. They have one particular behavior. Yeah, yeah, yes, yes. Yeah, so that's what that now you've seen that, right? And you are still making the same mistake. You see, that now the problem is you. You've seen that, you've studied that, you've seen it has been repeating itself by since maybe since 10 years ago, and you are still repeating the same mistake of taking the first move of the news, which is very wrong. All right. So that's why turtle soup is just like the missing piece of everything. You can see the news happened because of turtle soup, right? The reversal happened because of turtle soup. The beginning of the move happened because of turtle soup, right? So turtle soup is everything. So make sure you align yourself. You must see a turtle soup before you take a trade. If you don't see it, don't take trade. All right, don't take trade. It must be
Like,
it must be liquidity soup. All right.
by
Yeah.
the way,
All right.
news can do two things, like first is manipulate and then distribute.
Yeah. And listen carefully. Don't Once you are trading, once you are looking for trades, all right, don't stick on the higher time frame. Okay. Don't stay on the higher time frame. Stay on the lower time frame so that I can read price. All right.
Okay.
Now, 1 4 hour candle might give you. Now, look at the sell I took on GBP USD today. All right, the sell before I closed at 4 5 hour actually. Now, if you check the 1 hour, there was no liquidity soup on the 1 hour. It was just 1 hour candle. But on the lower time frame, all right, there was turtle soup, which are
Yes,
on
yes.
the 15 minute. Yeah, you can see it. So on the lower time frame, you will always see something. All right, you
Okay.
always see lower time frame turtle soup that will have position you in the tip. That's the information all these turtle soup sniper traders are hiding. The I don't know, I don't want to call names, but they're actually hiding it. They'll just tell you take model one, they'll tell you take this, but I'm actually showing you guys how you should actually take it. Right. So use time. All right. Now you go to a pair, all right. Go to like let me say USD JPY or USD card. Now study their time at which they always. Now there's no how you won't see a trade in a week with this model, with this Asia model, and using the weekly and the monthly. There's no how. You don't have a choice. You must see at least one trade in a week, one nice trade. All right. So just go and back test. Just go and back test. Even though it's one trade you take, you are okay. As long as you made money. The goal is to make money. All right. As long as you make money, and your capital is also preserved. All right. So that's the only thing. You don't need any other thing apart from that. Yeah, yeah, yeah. I'll go deeply into that. I'll go deeply into that. Yes, 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 yes. That's what I actually did today, but you were not paying more attention. Okay, no problem. No problem. No problem. All right, so you guys can leave my Google Meet now. Bye bye.
Thank you very much.
Yeah,
Okay,
yeah, bye
bro.
bye, bye bye.
Thank you,
Everybody
bro.
you can go.
Thank you, bro.
All right, no problem.
Send
No
the
problem.
recording, okay, bro?
Chris, I hope you yeah, recorded it. Yeah, all right. So after now, just send it to me. All right. Yeah, send it to me. Then you can also send it to others that need it also. All right. Thank you so much. Thank you. Have a great day too.